Real Country 1430 AM and 1073 FM WRDN. This is the WRDN Morning Farm Report. I'm Brian Winnekins. Joining us today, Wisconsin 3rd District Congressman Ron Kind. Talk about a whole bunch of different ag issues going on in D.C. Thank you to our newsmaker sponsors, including Alcivia Co-op, Compeer Financial, Osteoplastics, Annabis Silo, Animal Wellness Center of Buffalo Valley, and Synergy Cooperative. And Congressman Kind, thanks for joining us. It's been a while, a lot of stuff going on. I guess the first big thing, Canada, Dairy, USMCA, and they have basically told the USMCA Dispute Resolution Committee, yeah, whatever, we're going to do what we want. Now what?
Well, first of all, Brian, great to see you. Great to be with you again today. And happy June Dairy Days. It's a month when we celebrate our dairy farmers throughout the state, the hard work they put in, and the obstacles that they face with inflation, fuel costs, fertilizer costs, everything going up. So it really is my number one priority. It's inflation, 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 what we can do to bring that down in order to keep these operations alive and sustainable. But you mentioned Canada, and we've been having some problems with them complying with the terms of the trade agreement that we struck with them a couple of years ago. And it's all in black and white language. They know what they need to do. They've been hedging their bets. I just met with Agriculture Secretary Tom Vilsack last week about this specifically, what more we need to do to get Canada to do the right thing. But I'm glad the Biden administration is treating this seriously. They are enforcing it the way it's supposed to be. That was one of the reasons it took a little longer to get the Mexico, Canada, U.S. trade agreement finalized, is making sure we had strong enforcement language in it so that these terms would mean something. And that's what we're using right now to get Canada to comply. They know what they need to do, and I expect that at the end of the day, they'll get there.
If they don't, what does it mean for the U.S.?
Well, we have trade remedies. Yeah, we have trade remedies. We can hit them with some sanctions specifically targeted to their industry, and some tariffs that are available too, again, under the terms of the trade agreement, so that there should be no surprises here, that if you're not complying. And we're not at that step yet. We're still in earnest discussions with them, as they say, but we hope to get this resolved shortly.
Talking with Wisconsin 3rd District Congressman Ron Kind this morning. Congressman Kind, EPA just released, I want to say it's like $600 million or something like that for the Mississippi River. It's going to 12 states, Wisconsin's included, because we have rivers that flow into the river.
Yeah.
To help with phosphorus and that sort of thing, to try and limit that. What more do you know about that?
Yeah, this is part of the appropriation bill that I supported, making sure that we had crucial investments in our inland waterway infrastructure, which includes the Mississippi, the lock and dam system, which is vital for the upper Midwest economy, especially agriculture exports. But it's always been a sustainable resource too, Brian, not just commercial navigation, which is incredibly important, but the ecosystem management, the feasibility studies that are part of this grant that went out, and making sure we maintain that balance with tourism, recreational use, and the huge economic impact that has on our region as well. I'm glad, again, that we have this focus on it. The infrastructure bill that we just passed last year will help in that regard, and this is just the first tranche of that spending, expecting to see more in the future.
Meanwhile, there's been a new bill that's been passed, the Ocean Shipping Container Act. This is to help with the supply chain issues, at least for stuff going out. What can you tell us about that?
Yeah, there are just 9 shipping companies that dominate the trans-Pacific shipping when it comes to exports and imports. And naturally, they have a bit of a monopoly, not enough competition to drive down prices. They alone have increased their shipping rates by over 1,000% in the last 12 months alone. But what's most infuriating right now, Brian, is they bring those loaded cargo ships over from China to our ports on the West Coast. And many times these shipping companies are sending those cargo containers back empty without U.S. goods and products on it. And we're saying with this legislation that we passed, no more, that they're going to have to load up those American exports. A lot of it is agriculture exports heading to China if they're going to be sending those ships back out west. So it was long overdue. I'm glad we were able to meet with this bipartisan legislation. President Biden has been calling for this for some time, and he's eager to sign it at the end of the week.
Meanwhile, with the supply chains, you're also working on ways to try to unfreeze these supply chains, especially in rural areas like Durand and O'Galley and all of that, where we seem to just, there are times that there's just things not available. How do you get this open?
Yeah, part of that is what President Biden's been talking about, insourcing these jobs, insourcing these manufacturing facilities. So we're more reliant on ourselves for what we need. We're working on a bill called America Competes right now, which would make major investments in the microchip industry of the United States. We're so dependent on foreign countries for our basic microchip and microprocessor supply. As you know well, Brian, the world runs on that now. It's the modern economy. And so we're trying to figure out ways to make sure the incentives are in place. We have that production capability in the United States. This is vital for our national security purposes. And one of the things that we're, I think, very successful in hitting Russia with right now, given their unlawful invasion of Ukraine, are the high-tech export sanctions that we've applied on them, which involves microchips and microprocessors, computer software, the very things that a modern economy needs, the very thing that the Russian army needs. And that's having a real impact right now. But we also need to be looking internally for a lot of that. That legislation would go a long ways of spurring that. But beyond that, I mean, we've reduced the port waiting time to unload ships on the East and West Coast by 8-fold within the last 8 months. We've made tremendous progress there, but we're still seeing supply disruptions that are reflected in the increased prices that we're working through because of the global pandemic and how that slowed these lines down.
You mentioned Russia. Okay, so there's all these sanctions on them, but they have, at least for agriculture, something with the fertilizer side of this deal. Yeah, we can make nitrogen because we have the natural gas, but there's some other things that it's only there. I think it's potash and a few other natural resources. Right. You can't insource that. A lot of farmers are very concerned. Not, this year was okay. We had stuff booked. Next year, though, that's a different story, and they're pretty worried about this. What about that?
Well, that's why wars are bad, Brian. It has a huge disruption throughout the globe. It's not just the two countries that are directly in conflict, but the energy supply line that we're seeing that's drastically impacted by Russia's invasion. This is what comes when we're still dependent on these oligarchs for our energy needs. And it is a global marketplace for oil and natural gas, unlike wind, solar, geothermal, nuclear, things that we have direct control over within our own borders. And so as long as we remain dependent on those energy sources, when a bad actor like Russia does what they did, it's going to have a huge increase. And 1/3 of all inflationary costs right now are energy related. And so a big part of this is what Russia has done with Ukraine and how that's disrupted the energy market. And to Western Europe's credit, they have a plan of weaning themselves off relatively soon on their dependence on Russian oil and Russian gas. Not easy for them to do it since they're heavily dependent on it, but they've realized that Russia is not a good long-term strategic partner that you can rely on when Putin is behaving in this fashion. But you're right, we're looking at fertilizer costs going up. We've got major supply crimps on wheat, corn, on sunflower oil coming out of Ukraine right now. We're working with the Western European allies, primarily Poland, to try to establish corridors that could get that product out of Ukraine, since the Black Sea has been cut off by the Russian fleet right now. And yet the rail lines don't match between Poland and Ukraine. And part of that is for defensive purposes, but now we're trying to work through those infrastructure hurdles too. And this is where it gets complicated. And this is where it's frustrating that there aren't simple answers overnight that's going to solve the supply shortages or the inflationary pressures that we consumers are feeling back home here.
You mentioned the fossil fuels and weaning ourselves off. But part of the problem is we haven't built a new refinery in the United States of America since the 70s. And it's pretty hard to expect the new Bryan Oil Company to say, you know what, I'm going to invest $5 billion or whatever in a refinery when I'm hearing from not only the federal government, but state governments and that sort of thing, that by George, by this date, we're going to outlaw fossil fuel engines. We're going to, I mean, Congressman Kai, I can't blame the multinational oil companies. Yeah, I know they got the big profits, but can you blame them for saying we're not going to build nothing new? You
Well,
guys are wanting to end all of this. We're going to get the money now while we can.
yeah, Brian, you're right. Yeah, and that is part of the problem. There's a lot of profit taking on the backs of American consumers right now. Clearly, that's happening. But in previous years, when oil was at rock bottom prices, they took a loss, and so they didn't see the incentive to be investing in new refineries and more oil producing activities. They're sitting on 7,000 leases of oil and natural gas that they're not utilizing, and they don't want to bring that into production because they like the high prices. They can blame it on President Biden, even though they're laughing to the bank. They're using that money for share buybacks and for dividend distributions rather than price relief for the American consumer. And it's difficult to get at that. And again, it just shows you the folly of staying so dependent on oil and natural gas for our energy needs, because they will always literally have us over the barrel by not making the investments, by not increasing production as they're chosen not to do right now. And you look at the other sources, potential sources that could ramp up fairly quickly. These are not good countries like Saudi Arabia, Venezuela, Russia even. I mean, to be dependent on them to increase production when prices go up, I think is a fool strategy. And we have to be smarter as we go forward in the future.
But at the same time, okay, so let's say all 7,000 of those leases or 17,000 of those leases are all active. Permian in North Dakota, the one in New Mexico, they're all going full tilt. But I can't put crude oil in my car.
Yeah,
we don't have the refining capacity in the first place because we're having to import refined products.
Yeah.
So it doesn't, to me, and for agriculture, it doesn't matter if there's a lot of oil out there. If we can't refine it, then you still have the supply demand issue, and you're still going to have high gas prices. So I guess that's my point. Where, haven't we brought some of this on ourselves? Yes, I realize we need to move to other fuels down the road, but haven't we brought this on to ourselves by prohibiting and, in every step of the way, and throwing up roadblocks of not in my backyard for any type of new refinery or an expanding refinery over the years? And now we need it. And the oil companies, I frankly say rightfully so, are not going to invest $10 billion or whatever and go through all of the rigmarole for a refinery that in 10 years is going to be worthless.
Brian, I think you're misdiagnosing the problem, though, that this isn't a matter of onerous regulations preventing them from building. This has been a battle between the large and small refiners for some time. The large refiners want to dominate market share. They want that control. They're making a conscious decision not to build out in order to control that supply even more and benefit from it in situations like this. And yet that's free market capitalism. I mean, what can government do? We can't force them to buy in refineries. We can take leases away from them, though, that have already been issued if they're not going to use it. It's called a use it or lose it bill that I am supporting, that if they're not going to use it, we will release it to another company that will develop and will produce that. But they don't want that competition. So they're screaming bloody murder that we might actually take these leases away from them. And that's unfortunate, because there's also a patriotic responsibility, I think, that the big energy companies owe the American people at a time of crisis like this, so it doesn't tank the economy. But they tend not to view it that way. They're all shareholder driven. It's maximizing their return on investment and the profit that they can take to the bank. And there are very little tools or remedies outside of antitrust enforcement. And I think we do need to explore that more, given the consolidation in that industry. You've got a handful of large oil producing companies that dominate 80% of the market share, and that's not good for competition. The best friend consumers have is competition between companies. They keep each other honest, then they help drive prices down. And we lack that in so many areas of our economy: energy, the meatpacking industry. We actually have a bill coming to the House floor this week that would break up that monopoly with the meatpacking industry to create more competition and allow the smaller processors to be able to compete, including across border. It's been a major issue for us in the upper Midwest, and it will further incentivize E85 ethanol fuel for energy purposes and make it year long. We're doing a lot of that in the upper Midwest already. And that to me is a win-win for the consumer and for our farm producers that are actually can produce this renewable energy source anytime they want.
Finally, Congressman Kind, before we let you go, again, a lot of issues that we haven't chatted in a while. The Indo-Pacific Agreement, or at least what we're trying to work on, is tell us a little bit about that. And is that like a counter to the old Trans-Pacific Partnership or whatever they're calling it, the TPPC, I guess is now what they're calling it?
Yeah, they are. And it's this Asian Pacific reset that the administration is trying to engage these countries, realizing it is the fastest growing economic region in the world, the Pacific Rim area. We got to be in there. We got to be in there competing, selling our products and goods and services there too. I've always believed it was a huge strategic mistake for the United States to withdraw from the Trans-Pacific Partnership. It was an agreement that we negotiated, that other countries were eager to join. It contains a lot of the structural reforms we're demanding China to make. Now, China is not a party of that, but one day they want to be. And the enforcement to get China to change is contained in that existing trade agreement. So I'm still lobbying the administration to figure out a path forward to get us back into what we had already negotiated and which is already alive and working, which is that Trans-Pacific Partnership. But barring that, I guess the next best option is to have our own Asian Pacific reset that has started now, the formal kickoff about our trade relations and what we can do to better protect worker standards and environmental standards, elevate them up to where we are rather than trying to compete in a race to the bottom, which ultimately costs American jobs if we get caught in that cycle. So there's a lot of going on right now, but it is an important region that we've got to be engaged in, not just economically, but for national security and diplomatic purposes. And I'm glad the Biden administration sees that and is moving forward on it.
That is Wisconsin Congressman Ron Kind. You're listening to the WRDN Morning Farm Report.